Trade Like a Stock Market Wizard Summary. What's the story of Trade Like a Stock Market Wizard? Trade Like a Stock Market Wizard, 2013, unveils the SEPA, Specific Entry Point Analysis, investment methodology, guiding you through the intricate process of managing risks, maximizing profits, and, crucially, instilling confidence in your own abilities. What makes this book stand out is its assurance that you don't need to be a Wall Street professional to dive into the stock market. In fact, being a lay investor could be your greatest asset. Who's the author of Trade Like a Stock Market Wizard? Now, let's talk about the wizard behind this insightful guide. Mark Minervini, a seasoned Wall Street veteran, isn't just successful. He's one of the most accomplished stock traders in history, and his track record speaks volumes. Starting with just a modest sum, Minervini skyrocketed his wealth into the millions by the age of 34. This isn't his only triumph. His other best-selling books on trading, like Think and Trade Like a Champion and Mindset Secrets for Winning, further showcase his expertise in the field. Who's Trade Like a Stock Market Wizard Summary for anyone fascinated by the dynamics of money and investments. And for those wishing to learn how to maximize their power to their greatest benefit, why read Trade Like a Stock Market Wizard Summary? In the realm of the stock market, success isn't a roll of the dice, it's a product of hard work, knowledge, skill, and unwavering perseverance. If you're here seeking a roadmap to financial prowess, you're in the right place. Unlike gambling, where the odds are stacked against you, stock trading is a skill that can be cultivated. In this summary to Mark Minervini's Trade Like a Stock Market Wizard, we'll unravel the myth that investing is akin to chance. Instead, picture it more like brain surgery. While it might seem like a risky endeavor to take a knife to someone's brain, in the hands of a trained and skilled expert, it's all about surgical precision. Throughout this summary, we'll delve into the principles of consistency, commitment, and adopting a long-term vision, your compass to navigate the complex world of investing without falling prey to self-sabotaging behavior. Are you ready to transform your approach to investing and step into the realm of financial expertise? By Trade Like a Stock Market Wizard on Amazon. Trade Like a Stock Market Wizard Lessons. 1. Focus on companies exceeding earnings expectations. In the dynamic world of stock trading, the golden rule is not just buy low, sell high. It's about understanding the true value of what you're investing in. Take the 2009 financial crisis as a stark example. At that time, iconic companies like Citigroup, Lehman Brothers, General Motors, and American International Group, AIG, faced historic lows in their stock prices. While it may have seemed like a once-in-a-lifetime opportunity to buy, the subsequent crash in their values revealed a harsh reality. The lesson here is crystal clear: the stock market doesn't care about a company's past glory, it's all about its current and potential growth. The marketplace measures success through expansion, not pedigree. So, resist the temptation to invest in a sinking stock just because of its name recognition or past reputation. Often, the future belongs to companies with names you've never encountered. Enter the cockroach effect, a phenomenon familiar to New Yorkers. Much like spotting one cockroach implies more are lurking, positive surprises in a company's quarterly earnings can signal ongoing good news. If a rising star in an industry catches your eye, it's a cue to pay attention. This surge of interest can attract institutional investment even before the official numbers are out, a savvy strategy for boosting earnings. Conversely, the contagion effect applies to less sunny surprises as well. Companies failing to meet profit estimates often continue to disappoint. When assembling your investment lineup, focus on those exceeding earnings expectations in recent quarters. In simple terms, steer clear of the negative mirror effect and embrace companies showing positive signs of growth. Now, this might sound like common sense, but the next section will reveal why this approach is more counterintuitive than you might think. Onwards. 2. Avoid the pro trader's mistakes. Peter Lynch, hailed as one of the greatest money managers ever, shared a valuable piece of advice: the amateur investor has many built-in advantages that could result in outperforming the experts. Rule number 1 is to stop listening to the professionals. Lynch, with a remarkable track record of growing the Fidelity Magellan Fund by an average of 29% annually over 13 years, certainly has the credibility to challenge conventional wisdom. Contrary to popular belief, professional money managers don't hold a monopoly on success. Many large investment firms operate on flawed ideas, inflated egos, and misinformation. Here's why the independent investor, armed with amateur enthusiasm, might actually have the upper hand. Firstly, institutional investors, managing large funds, face a significant disadvantage: their need for liquidity. Handling massive shares in their portfolios limits them to companies with a substantial number of available shares. In contrast, promising superperforming stocks often belong to smaller, more agile companies with fewer shares. Secondly, institutional fund managers are constrained by board committee approvals, limiting their investment choices. These committees often prefer so-called safe bets like Google or Apple. In the face of market downturns, managers can conveniently attribute losses to broader market trends, avoiding personal responsibility. As the Wall Street adage goes, nobody gets fired for buying IBM. Independent investors, unburdened by committee oversight, enjoy the freedom to explore smaller, riskier, yet promising candidates without the fear of immediate repercussions. Thanks to contemporary technology, individuals now have access to the same tools as professional traders, freeing them from the shackles of conventional wisdom. Remember, riches aren't found by following the crowd and sticking to well-trodden paths. Next. 3. Use the SEPA method. Mark Minervini's renowned specific entry point analysis, SEPA, strategy is a product of 3 decades of hands-on trading experience and a deep dive into empirical, historical stock market data. Unlike strategies solely fixated on a stock's value, SEPA also considers the speed of its rise and the catalysts behind its growth. In the world of the stock market, time equals money isn't just a saying, it's a literal truth. Now, let's delve into the core tenets of SEPA. We're already familiar with the basics: seek out companies on a clear upswing, evidenced by growth in revenues, margins, and earnings. But what sets potential superstars apart from the rest? Superstar stocks are ignited by a spark, a new contract, an FDA-approved pharmaceutical breakthrough, or a hot product with compelling branding. Think Apple's iconic iPhones, Microsoft's Office Essentials, or Google's ubiquitous search engine. These examples are major players, but SEPA is looking for relatively youthful companies, typically within their first decade post-initial public offering, IPO. In the early 90s, Minervini focused on trading lesser-known companies showing strong growth signs, like US Surgical, a pioneer in surgical equipment. While many investors shy away from unfamiliar names, this is precisely the opposite of what you should be doing if you're hunting for the next superstar stock. Once you identify a stock with star potential, timing your entry is crucial. SEPA emphasizes finding a lower-risk entry point before the stock takes off. Get this right, and you could land a big catch. However, timing your exits is equally crucial. Not every promising stock will yield massive profits, even with a perfectly timed entry. Establish stop-loss points to protect your investment and know when to sell to secure your gains. SEPA isn't just about finding winning stocks, it's a comprehensive strategy that navigates you through the intricate dance of entering and exiting the market. Next. 4. Put in the time and effort to improve. Wondering if you have what it takes to conquer the stock market? The unequivocal answer is yes. Surprisingly, the market isn't your biggest adversary, it's the belief, time, and attention you dedicate to the task that can either propel you forward or hold you back. Reflect on the words of the pioneering trader Jesse Livermore, who navigated the daunting stock market crash of the 1920s successfully. Wall Street never changes, the pockets change, the stocks change, but Wall Street never changes because human nature never changes. As you embark or renew your trading journey, avoid fixating too much on the price/earnings, PE, ratio, a common pitfall for many investors. While high PE stocks are often avoided, Mark Minervini's strategy challenges this norm. Superpower stocks in the making can demand a premium price as they rapidly grow, reflecting their potential for exciting developments and meteoric rises. Consider Minervini's bold move in the 1990s when he invested in Yahoo with a staggering PE ratio of 938. Despite skepticism from others, Yahoo grew a staggering 7,800% over the next 2.5 years, proving that PE ratios are more about sentiment than concrete value. Learn this lesson well. P/E ratios reflect market sentiment, but they shouldn't overshadow your focus on growth potential. Another caution: resist the allure of investing solely based on what's on sale. Opting for the cheapest stocks can lead to a toxic spiral, making it challenging to sell when the price drops further. Instead, invest your time and money in companies showing signs of superstar potential. Remember, you usually get what you pay for, a guiding principle to encourage thorough research and self-trust. Success in the stock market doesn't demand a math doctorate. Specific Entry Point Analysis, SEPA, was born from decades of real-world trial and error. Don't fear making mistakes, they are stepping stones to finding your stride and what works for you. Remember, no one is as invested in your wealth and success as you are. Henry Ford's words echo the sentiment: there isn't a person anywhere who isn't capable of doing more than he thinks he can. Embrace your potential, trust your instincts, and watch your journey to financial success unfold. Onwards. Trade like a stock market wizard review. In conclusion, the Specific Entry Point Analysis (SEPA) methodology offers a strategic approach to stock trading, aiming to maximize rewards while minimizing risks. The three core principles underpinning SEPA are crucial for any investor looking to navigate the dynamic world of the stock market. Firstly, understanding the right and wrong times to purchase stocks is fundamental. SEPA emphasizes the importance of timing, recognizing that strategic entry points can significantly impact potential returns. Secondly, the methodology teaches investors how to spot superstar stocks before they experience a meteoric rise in price. By focusing on companies with genuine potential for growth, investors can position themselves for substantial gains. Lastly, SEPA asserts that making a small fortune through wise investments in promising stocks is a realistic goal. It challenges the notion that success in the stock market is reserved for a select few, emphasizing that with the right strategy, anyone can achieve financial success. Crucially, the key to success lies in individual initiative and research. Following the crowd is not the path to prosperity. Instead, investors must do their own research to identify opportunities. SEPA encourages self-belief, emphasizing that the only limitations are those we impose on ourselves. Everything needed for success is already within reach. In the ever-evolving landscape of the stock market, breaking free from self-imposed limitations and believing in one's ability to make informed decisions are the catalysts for achieving remarkable financial outcomes. Remember, records are meant to be broken, and with the right mindset and strategy, you can chart your course towards financial success. Trade like a stock market wizard quotes. Mark Minervini quotes, "I fear not the man that has practiced 10,000 kicks once, but I fear the man that has practiced one kick 10,000 times." Bruce Lee, if you want to be the best, you have to do things that other people are unwilling to do. Michael Phelps, winner of 17 Olympic medals, virtually every super performance phase in big, winning stocks occurred while the stock price was in a definite price uptrend. In almost every case, the trend was identifiable early in the super performance advance. The difference between interest and commitment is the will not to give up. When you truly commit to something, you have no alternative but success. Growth comes at the expense of comfort. You want to get on board when institutional money is pouring into a stock and lifting it significantly higher. If you find yourself getting stopped out of your positions over and over, there can only be two things wrong. 1. Your stock selection criteria are flawed. 2. The general market environment is hostile. A new idea is delicate. It can be killed by a sneer or a yawn. It can be stabbed to death by a quip and worried to death by a frown on the right man's brow. Investing styles may differ among successful market players, but without exception, winning stock traders share certain key traits required for success. Truly, this is what makes acquired knowledge and first-hand experience the greatest tool to succeed and build upon in stock trading and in life. Your first loss is your best loss. Life is rich even if you are not. Things are happening every day, good and bad, and that it was just a matter of deciding what I wanted to be part of. Trade Like a Stock Market Wizard by Mark Minervini. If you want to reap big gains in the market, make up your mind right now that you are going to separate trading from your ego. It's more important to make money than it is to be right. Both opportunity and peril surface suddenly in the market. It takes swift, resolute action to exploit one and elude the other. Nothing can unravel a trader's courage more than a huge loss in a stock trade. It wasn't until I suffered enough big losses that I made the decision that turned my performance from mediocre to stellar. I decided it was time to make money and stop stressing about my ego. My goal is not to buy at the lowest or cheapest price, but at the right price, just as a stock is ready to move significantly higher. Trying to pick a bottom is unnecessary and a waste of time. It misses the whole point. Numbers won't do anything to improve your psychology or mental preparedness. The road to success in the stock market is not a system or strategy, it's within you, and it will be realized only to the extent that you are able to control and direct your emotions as you encounter challenges, of which I assure you there will be many. You might as well know that at the start. Otherwise, you'll only be chasing false hopes.